Hello, hi, howdy. I want to pretend that this is the live version of the webinar, but it's not because I bombed live. So for the recording, I'm redoing it because you guys deserve the best. So I got inspired to do this last chance webinar, not because I wanted to use scare tactics to motivate anyone to buy, but I did want to get your attention because I think we're at a really pivotal point in time. I think the housing market is giving us some really strong signals, but at the same time, everyone is distracted by interest rates. Everyone I'm talking to is asking me about interest rates coming down and what do I think about Trump suggesting a 50-year mortgage? Will that change the game in 2026? How about if I port my mortgage? And I just feel like all the attention is in the wrong place, and so many people are missing the last best entry point into housing, at least for this cycle. So that's why I wanted to do this webinar. I actually do these every single month. So you can find me here the first Wednesday of every month at noon Pacific. You can sign up in my inner circle and join us. It's a market update, but less stale. I'm going to tell you what we're seeing in the headlines, what the data is telling us, but I'm going to add in what I'm seeing, like as boots on the ground, what my buyers are experiencing, the conversations I'm having with realtors, and I'm in the market myself shopping for investment properties. So what you'll find on Property Pursuits is that it's a different kind of market update. I'm blending everything together to show you what's really happening. And I'll tell you how I think that it should impact your strategy, because I'm not a cover your ass type mortgage lender. I'll tell you what I think you should do. You can do what you want because I'm also going to educate you so that it would be responsible for you to be behind the driver's seat on making these kind of decisions with real estate. So let's get into today. Actually, before we get into today's info, why would you bother listening to me in the first place? A lot of you getting this recording are already a part of my inner circle or have worked with me as your mortgage lender. Some of you found me on Instagram. If you just are experiencing me for the first time, God be with you. But also, here's my background. I've been in mortgage lending for 12 years. That's a couple different market cycles. I started way back in the day during the FHA streamline refinance boom. You probably only know about what I'm talking about if you were born in the 70s or earlier. But since then, the market's kind of come full circle almost 3 times now. And experiencing those market cycles is definitely what's informing me in the advice that I'm telling you now, that you need to be paying attention to what's happening now at the start of 2026. I also personally invest in real estate. I mentioned that before, but that gives me a different perspective than a lot of other lenders because I'm out there shopping too and trying to make the numbers work with these interest rates and with this inventory. And then lastly, I've just spent the last 5 years studying. I just got my master's. I graduated in December with a master's in marriage and family therapy. So I've been studying psychology, and where I focused was on behavioral finance and what goes through our head, what forces our habits, what really forces our hand when it comes to financial decisions and how we interact with money. We're all in a relationship with money, whether we want to admit it or not. And what I learned about psychology, about neuroscience, about emotional intelligence, I'll use that. I'll mix it into what I'm teaching you about real estate. So right now, I think that everyone is pretty much preparing for the wrong market. You've probably been told that in 2026, you should prepare for a rate drop market, the cheap payment market. The one that gets everyone's attention, right? Everyone likes to talk about low interest rates. But housing cycles don't really reward the people who waited the longest. Unfortunately, that's just not how it works. They don't reward patience. The people who benefit in cycles like this are the people who understood what was happening early enough in the cycle that they could take advantage of it before everyone else woke up. 2026 probably won't be the easy market that we were promised or that everyone in my industry was fantasizing about. I think it's going to be what we'd call a transition market. But transition markets are actually a really, really good opportunity. It's not something to be sad about. In transition markets, we've historically seen that first-time homebuyers have the best odds at breaking in because they have a little bit of negotiating power. They have some leverage. And that's why I wanted to do this webinar. Not to rush you, not to scare you, but to make sure you're paying attention to the opportunity in front of you so that you don't miss it. I feel very strongly that if you wanted to buy a house, or even if you wanted to buy your first rental property, or if you wanted to move up to a bigger house, or you've been waiting to downsize, this is a moment you should be paying attention to. Here's why I think that people are preparing for the wrong market. So you don't just have to take my word for it. But the first thing we're going to have to do is we're going to have to normalize making decisions based on facts, not feelings. Because we live in a time where the rhetoric is pretty crazy. People throw out some pretty wild ideas, and people want to react based on gut instinct. You should listen to your gut. I'll tell you that as a therapist. But when it comes to making money decisions, you have to just base that on facts. You have to make the best decision you can with the information that's available right now. And that won't stop you from making another good decision if different information becomes available down the line, right? So yes, Trump is pushing for aggressive rate cuts. And yes, we will probably get a new Fed chair who's on board with that because he gets to appoint them in May. But inflation doesn't really care about political pressure. It's just data. And the Fed needs data in order to make cuts. They can't just vote based on vibes. I think rates will soften slightly in 2026, but I think they're unlikely to fall as fast as everyone wants them to. And I think that's probably going to be your biggest advantage as a buyer. Sounds weird, right? Why would higher interest rates give you an advantage? Well, if you don't believe me, we can actually just take a quick stroll down memory lane. So some of you on this call are watching this recording, because there's no one on this call because I'm redoing the whole thing. So some of you watching this recording, remember in the pandemic, 2021, when interest rates were super low. But the thing is, we all suffer from a recency bias. And yes, that's impacting my advice here. But here's what I've learned from my clinical training. We have a tendency to block trauma. We rewrite the narrative to remember things the way we want to. And we kind of just forget what sucked. This is why the population continues. This is why mankind has continued. Women block out the trauma of childbirth. Otherwise, we would never do it again. The same thing happens in a lot of other scenarios, including remembering those low interest rates. Sometimes we forget what happened then. We forget about the bidding wars. We forget that our friends who have a 3% interest rate also paid $50,000 above list price for that house and had to waive their inspections. We forget that when the appraisal came in low, they came out of pocket. They had to pony up that difference because the seller wasn't going to match appraised value. I remember working all weekend to send out 10, 15, 20 pre-approval letters. It was really cool to have that many buyers, to have that many clients. What wasn't cool was that I'd come to work on Monday to no contracts. I just worked for free all weekend because every single one of my clients got outbid. Lower rates, more qualified buyers. More qualified buyers, demand surge. When demand surges, that creates pricing pressure. And when there's pricing pressure, you've lost all your leverage as a buyer. You've lost your negotiating power. So personally, I think it's really important to remember the whole story about a low interest rate market. Because the truth is, I don't have a crystal ball. It could actually happen this year. We could see the bottom of interest rates in 2025. We live in a time of black swan events. There's no way you could rule out that anything's possible, really. If it happens, it might not be as magical as you thought it was going to be. If you're waiting for lower interest rates, then you also need to be preparing for the pricing pressure that will come with them. But let's say they happen. Let's say interest rates do tank and we see within the next 3 to 4 months interest rates in the 5s. Do you know how much demand that creates? Do you know how much pent-up demand there is now? One of the easiest ways to explain this is that every time interest rates went up 1 point to the peak of 8% in 2023, October of 2023, every increase by 1 percentage point on interest rates resulted in 3 million households being priced out of the market. So as they come down, maybe not all 3 million households come back. Maybe some of them gave up, got discouraged. Maybe some of them signed really long leases and decided against buying. But a lot of them are coming back, and they will all be your competition. Here's, on the other hand, the slow thaw advantage that happens. If we get more listings gradually, if we have longer days on market, if we have negotiating power, less bidding wars, less emotional urgency, you have breathing room. A slow thaw market gives you the ability to make decisions like a chess player instead of a panicked mess. This right now is the kind of market where you can negotiate. You can compare different properties to see which one actually best suits your family. And if things and inspections aren't good, if the appraisal comes in low, this is the kind of market where you can walk away if you need to. You wouldn't think I'd be telling you to do that, but it's true. There's times when it's not the right deal, and you need to be able to be calm enough to have the time to review and make the right decision. That's a huge advantage. And buy based on your personal timing, based on finding the house that actually is the right one for you at the right time when your personal finances are ready to do it. Stability is really conducive to strategy, and I don't think we talk about that enough. That when a market is not a chaotic mess, that you are more likely to make good financial decisions. None of us know how long this stability will last, and that's why I think we should be paying attention. You can find me all the time, guys. You don't have to wait for these monthly recordings. You don't have to wait for Property Pursuits on the first Wednesday of every month at noon. I actually, in my inner circle, put out a blog every Friday about whatever's happened in housing and the economy and how it should impact your strategy. It really will help you sound smart at happy hour. And online on Instagram, it's my goal in 2026 to put out a video every single day. I'm saying this so I can hold myself accountable because you're more likely to accomplish a goal if you say it publicly. But I'm planning to put out a video every single day. So find me, follow me on Instagram, and stay in the loop. Because as things change, my advice might change too, but I'll be completely honest and direct with you about it every step of the way. Here's something really interesting to talk about. There's a cost of waiting that I don't think we really consider. We think that we're being responsible and cautious, but we don't understand that doing nothing costs money too. Waiting costs money. Over the past 12 years, I've talked to many buyers who are waiting for different reasons. Waiting for lower prices, waiting for lower interest rates, waiting to be able to afford more home, waiting to be able to afford the home in the neighborhood they want to live in. Here's what I found out over and over and over. And I say this with complete transparency. Waiting is not an investment strategy. I've seen too many people wait themselves right out of the market. I've seen them, and it's really painful to watch. I've seen people get priced out. They qualified to buy, but they didn't qualify for enough of a home, and then interest rates went up, and their buying power went the opposite direction. That sucks to explain to someone who is waiting. And I don't know how long the cycle lasts this time, because we are literally in never-before-seen economic times. If you were one of those waiters, you are the reason I did this webinar, because this is the window that you've been waiting for. You said you were waiting until you could get a deal. You can get a deal now. It's time to put your money where your mouth is. Because if you wait and you lose this window, I don't know when it comes back. And you're thinking, well, Shivani, you're a loan officer. Of course you're telling me that because you want to get your next commission check. Fine. Don't listen to me. Don't take my advice. You don't have to pay attention right now. You don't have to listen to this. But I'll tell you this. You're the only one who can judge your own capacity, who can judge your own tolerance for emotional fatigue. What will it be like for you if you get priced out? What will it be like for you if you have to wait years for another window to break in? Only you know what toll that will take on you personally, on your family, on your finances. Only you know that. Rent is going up. Waiting is not neutral. That's the point I want to make. If you think that by doing nothing, you're playing it safe, there's risk to doing nothing also. We saw rents increase faster than we saw appreciation slow in the last year. So, to make this perfectly clear, we didn't see home prices come down, guys. We just saw them stop going up so fast. We saw appreciation slow. But rents were increasing at a rate faster than appreciation was slowing. I hope that makes sense. I know it's complicated, but what I'm telling you is rents are still going up and home prices are going up, but not as fast as rent prices are. Equity is still compounding for everyone who bought, and you're missing out on those gains. So be honest with yourself and understand that waiting, doing nothing, is not free. There's a cost there too. Here's the signals that I think we should be paying attention to, in addition to interest rates, so that you can really make the right choice so that you know when you want to jump in and so that you can identify the window of opportunity for what it truly is. These are cycles that show up before the headlines do. So if you are going to be paying attention to timing, these would be, if not as important as interest rates, more important. I don't think I said that right. But anyways, they're important. Pay attention to these signals because the savvy investors do. They pay attention to inventory direction, seller realism, pricing pressure, policy pressure. We have to pay attention to the politics. That's the nature of the world we live in. Incentive shifts. I'm talking about what builders are doing. Even if you're not in the market to buy new construction, pay attention to how desperate builders are to move their inventory. What incentives are they offering? Because that tells you about the housing market. Pay attention to neighborhood trends and pay attention to buyer competition levels. What are mortgage applications doing week over week? How many people are jumping in? Those are the metrics that savvy investors track, and that's exactly why the wealth gap grows in times like this. You may or may not have heard how they say that recessions create millionaires, because the ones watching the cycle and acting at the beginning of it reap all the benefits, while everyone else just gets priced out. I don't want you to just think that this is my opinion sharing this stuff, so let me put some actual data behind these signals so you understand what I'm saying here. National active listings were up. I don't have December data yet, but if we look at November, if we look at the end of 2025, we were up 12.6% year over year, making that 25 months of consecutive inventory growth. That kind of price growth increased. So if we looked at earlier in the year, towards the end of the year, we saw a shift in how much inventory was on the market, how much was available, how many listings were up. Redfin data shows that 1.9 million homes were for sale in late 2025, which was up almost 6% year over year, meaning buyers had more choices at the end of last year than they had in previous years or even earlier in the year. But that's still below long-term historical levels. National Association of Realtors also reports 4.2 months of supply. So this is important to consider because we would say it's a buyer's market when there's over 6 months inventory. Buyers have more choices, so they have more leverage. When there's less than 6 months inventory, we say sellers have the upper hand. It's a seller's market. I only said 4.2 months supply. But the reason that's significant is because in recent years, we've seen less than 1 month's supply. In my market here in Reno, Nevada, we saw markets where there was less than 7 days supply in recent years. So to go from less than 7 days worth of inventory to 4.2 months feels like a shift. It feels like buyers have more advantage. And they do, from what I'm experiencing with the negotiating. So if inventory is rising and buyers have an advantage, you get where I'm going with this. It's a gradual thaw. It's not a flood, but it's noteworthy. Then we can look at housing demand and sales activity. Pending home sales were at their highest level in nearly 3 years at the end of 2025. Buyer momentum was returning. Existing home sales had increased modestly month to month, and mortgage rates had eased a little bit. Forecasts from economists, not politicians, they're anticipating a slight pickup in sales in 2026, but still below historical norms. Window of opportunity. If buyer engagement is improving but not explosively, that means that if you're prepared, if you're ready, if you act quickly, you get ahead of your competition before it really ramps up. So price growth slowing, and if we look at regional dynamics, which it's important to do, guys, because there's national trends, but then there's your market, and you want to look at the hyper-local data for your market. Here in Reno, typically whatever we see happening on a national level, it's like it's happening under a magnifying glass here. We almost see it like at a more intense scale. But that might be different from wherever you're watching this from. And you want to pay attention to the very local data. But for now, I'll just share national. Home price growth, the appreciation I was talking about, it did decelerate in 2025. Again, not telling you prices dropped. They just stopped going up as fast. FHFA data showed modest price growth throughout the country, reinforcing this whole stabilization, slow thaw market trend I'm telling you. And a lot of buyers started moving out of expensive, high-cost areas to refuge markets. So, if you couldn't afford in city proper, you started moving out to the suburbs. buyers started realizing that home ownership and not missing out on those equity gains or this window of opportunity was an important move to make. I want you guys to listen to this news clip real quick.
Tonight, new reporting on why the American dream feels increasingly out of reach. Home prices have skyrocketed for years, and the latest report from the National Association of Realtors shows the share of first-time homebuyers has dropped to 21%, a record low. CBS's Andres Gutierrez is in Burbank.
So, first-time homebuyers, they're missing out. Their share of the market remains historically low. And I'm personally not okay with that. I think you have to take advantage of this chance because I have seen home ownership change the course of people's lives. I have seen it change their financial security. I've seen it change the way they breathe, guys. The relief that comes with owning a home and then to start to realize the wealth building that happens there, it changes everything. I'm not okay with first-time homebuyers getting phased out. I'm not okay with first-time homebuyers missing their last best entry point for this cycle. That's why I did this today, and that's why I'm glad you're paying attention and watching this. First-time homebuyers made up less than 21% of the market in 2025, and that was the lowest share on record. No one should be okay with that. They need to break in. We don't want to become a nation of renters, and it's better systemically for our entire economy if first-time homebuyers get their chance. So, if you're hoping that 2026 will be your chance, you need to book a one-on-one with me. It doesn't mean that you have to buy this year, but you need personalized advice. This webinar was great to get the data, to get the big picture information, but you need advice that's specific to you. You might be just dipping your toes in. That's fine. I'm happy to do a quick call with you and answer your questions. You might be ready to apply now and see what your buying power could be in 2026. That's great. You might already be shopping, but feeling like you don't have enough guidance. I will help you. I won't let you miss your window of opportunity. Just schedule a quick call. It's free. It's painless. It'll be totally comfortable, and I'll help you so that you don't miss this window. Thanks for watching.